Now.
Thank you, David. Okay, so today's talk is Spot the Calm Before the Storm, the Intelligent Indicator with a Personality. It sounds like a mouthful, it probably is, but as you will hopefully see at the end, every word in this title has been carefully chosen. I'm trying to prove to you that, this presentation can fulfill what it's claiming. All right, but before we start, just to make the lawyers happy, of course, trading is risky. Only invest what you are potentially willing to lose. If it's about hypothetical performance and backtest results, these are not indicative necessarily for future results. All right, so now that the lawyers are happy, let me introduce myself. My name is Daniel Sinnig, and I am the technical director at TradingIndicators.com. And I'm here today presenting, but in the chat room is my colleague Homer, my business partner, who will be manning the chat. And if you have questions, feel free to write them into the chat window, and Homer will interrupt me if necessary, or David will if there are pertinent questions. Okay, so I'm actually a software engineer by training, so my vita, my biography is a bit different, perhaps from the other presenters at this event. And for the longest time in my life, I wanted to stay in the field of software engineering. I wanted to become a professor at the university. I even taught multiple courses here in Canada, and with the objective of going all the way. At some point, I got attracted by industry. I moved to work for bigger banks, and including Morgan Stanley. And I was always fascinated, although not full time, but fascinated by trading. So I tried it out. And of course, this is more than 10 years ago. And of course, I made all the mistakes that I guess everyone does at the beginning. I overtraded, I took too much risk, I revenge traded, and of course, I lost some money. And then I took a hard look in the mirror and realized, wow, trading is hard and I need help. What help meant for me as a software engineer is I need better tools that help me make better trading decisions. And this is really where our story, the story of TradingIndicators.com, starts. We are what one would call a trading solution provider. Again, another mouthful. But basically what we do is we create and innovate tools that will help you, the trader, to make better trading decisions. With everything we do, we're trying to push the envelope of what is possible to be as slick and as innovative and as smart as you possibly can do. For example, we equip all our indicators with rich visualizations, which will help you to see at a glance what is going on. We introduce powerful features such as real-time statistics to our indicators, which will help you make trading decisions or trades when the odds are stacked. And this is possible because we are actually a multi-talented team made up of traders, of course, UX designers, software engineers, and other people. So, and all of us working together to provide or create trading tools which are useful for you, the trader. And what is really important to us in everything we do is that we strongly believe that trading is highly personal. Not every trader is the same. In fact, every trader or traders are actually quite different from one another. Some traders might be more conservative, others might be more opportunistic. Some traders might be more, intuitive. They follow the intuition or the discretion. Others rely on statistics and hard facts. Some traders are just starting out. Others are perhaps starting out of trading full time. And I have been doing this for a long time with a lot of experience. And guess what? The needs of all these different trading personalities are very different. So what works for a seasoned trader may not necessarily work for somebody who's just starting out. Now, for us as a trading solution provider, this poses both a challenge and an opportunity. The challenge is to understand, of course, what are the different needs of the trader, of the traders. And the opportunity is once we understand what these needs are, we can create tools and indicators which are fitting the needs of the trader. And this presentation is about one such tool. Now, how do we learn about the needs? Well, first of all, we do interact a lot with our users. So we listen a lot to feedback, to concerns, to suggestions. And most of our tools at TradingIndicators.com they have went through several iterations, and these iterations were driven primarily by feedback from users who, suggested new functionality or perhaps things you could do better. And we listen and we integrate these into our indicators. Now, we also believe that an intuitive design is crucial for the indicator to be truly useful. And we do not believe that overloading an indicator with features which may not be needed is a good thing. Simplicity typically is better than complexity. And we do care about the user experience. Now, I invite you to check out our website at TradingIndicators.com, where you can see all our different products. Now, and one last thing about our website, we do offer indicators for various platforms. So all the popular platforms are supported, including TradingView, NinjaTrader, TOS, MetaTrader, Wealth Charts, and so forth. So please check out our site if you like. Now, enough about me or us. Let's talk about you for a little bit. So if I asked you the question, what kind of trader are you? Some of you may answer, like our friend Chair here, well, I don't really know trading yet, but I'm interested in learning and want to have more control over my financial future. Matteo may say, well, I'm a professional trader and want more advanced tools to help me fine-tune my approach. Or Steffi may say, I'm an occasional trader. I trade after work when I get home, and I want a tool to help me make better trading decisions. All three are different trading personalities. And as you can imagine, all of them have very different needs to support their trading. So what I'm going to show you today is an indicator which we have built in-house, which will be a game changer for each of these three different trading personalities. Now, so this is the suspense, but before I'm going to reveal what we have built, let's just back up a little bit. And I want to show you a chart first. So let's have a look at this chart. In fact, both halves, the upper half and the lower half, they represent the same price action. This is Apple on the daily chart. So same price action. Now, what we can see on the top here is the typical trend entry. Now, if you're a trend follower, a trend trader, you may have taken this entry here because, well, an uptrend has been clearly established. You can see this by the fact that the previous high has been exceeded. We're making higher lows. Momentum and volatility is picking up. And you may take this as evidence, well, the trend has been clearly established. Let's go long at this point. Okay, so on the bottom half, we have what one may call a typical counter trend or reversal entry. Why is that? Well, because we had a downtrend here at the beginning, price was falling, but at the onset of price going sideways a little bit, we actually go long. And counter trend traders may have taken this trade because there has been some evidence that the previous downtrend has come to an end, it's fading out, and the trend might reverse. Now, why even trade counter trend? And I put this slide here on purpose. What has one key advantage to it? If you are right and find a proper counter trend entry, you will get into the trade at a much better price. Just compare this entry point here, which is perhaps at 68 versus the one up here around 84. So you are getting long at a much cheaper price. Thus, there's a much bigger opportunity to cash in on this trade if you're right. But of course, the downside is that finding these counter trend entries and being right is actually very, very difficult, because chances are once you're in a trend, the trend will actually continue in the direction of the trend. So keep this in mind. Now, however, in this presentation, I want to focus on the lower half. I want to talk about reversal entries and about an indicator which we have designed to pinpoint with high probability these reversal points. All right. So a reversal trade or counter trend trade typically happens when a predominant trend comes to an end, it will lose strength and momentum and may turn into a sideways consolidation or a trend in the opposite direction. And this is what we are betting on. That the downtrend in this case here has come to an end and will reverse into an uptrend, which will give us an opportunity to go long. Now, there are many warning signs to depict or to predict trend reversals. And one very popular one out there, and I'm sure you've all heard about it, is called divergence. And generally speaking, a divergence occurs when price is doing one thing and an underlying indicator like an RSI or perhaps a stochastic is doing the opposite as what it should do. So they're not agreeing with each other. And if this happens, we have a discrepancy, or in other words, a divergence. Now, we have done a lot of research in our lab by our engineers, doing a lot of back testing and analysis and data crunching. And we have made a very interesting observation, which has led to a new notion of divergence, which I will introduce soon. We have determined that bearish bars tend to be bigger or more volatile than bullish bars. For example, we have taken all the S&P 500 stocks over the last 10 years and we compared bar sizes. And we determined that bearish bars, like down bars, are on average 5% larger than bullish bars. It's an interesting observation. I believe it's probably because when price is falling, people tend to panic more or get more nervous than when price is going up. And therefore, they may end up doing rash decisions, which will increase volatility. So this is how I rationalize it. But it's not really so important what the psychological phenomena is. It's important that this statistic actually exists. And it doesn't only exist for the S&P. You can actually find these or similar statistics on all kinds of symbols. So on the SPY, the SP 500 ETF, bearish bars are more than 12% larger than bullish bars. On the NASDAQ ETF, QQQ, it's even 16%. On the Dow ETF, 13%. On Bitcoin, it's 13%. Ethereum, 5%. So this is a phenomena which holds true almost across the board. Now, we have developed our divergence indicator based on exactly this observation, which we call volatility divergence. And likewise, or similarly, we have called our new indicator divergence cloud, which is designed to predict trend reversals using a volatility divergence. As it turns out, this notion of divergence has the potential to be of high probability. And what I mean by this, I'll show you in a second. And our indicator not only gives you entry signals, but it will also color your chart, which we'll also see in a second, reddish or greenish, depending on whether it has found bearish divergence or bullish divergence. Okay, so before we look at some examples, Divergence Cloud, the indicator, gives you entry signals when to enter into a trade, but also exit signals, because managing a trade and exiting a trade is just as important as entering it. And eventually, you want to liquidate your position. We have used very innovative visuals, which you'll see in a second. The indicator works on all time frames, all chart types, candlestick, tick charts, whatever you want, and all asset classes. And we have built in what we call real-time statistics, which I'll get to it in just one second. Now, let's have a look at some charts. So this is what do we have here? We're having the S&P mini futures on a 1 minute time frame. And I want to show you a few things about this indicator. First of all, once it's loaded on the chart, you will see this glowing colors across the board. Yeah, this greenish color here, or perhaps this reddish color here. These are the divergences if they exist. Greenish color stands for a bullish divergence, and reddish for a bearish divergence. In addition to this, the indicator also shows long and short entries based on the cloud color, and when evidence has come together that a trend reversal might be imminent. For example, down here, you can see this on these bigger triangles. Yeah, we have bullish entries, buy entries, and the bigger reddish triangles are bearish entries, sell entries. We also show exit signals or exit recommendations. And you can see these exits with these smaller triangles in the opposite direction. For example, these ones here are exit suggestions to book partial profits after this long entry. So you would liquidate a part of your position here a bit more and so forth. So we have entries and exits. And the indicator has been designed to detect early signs of potential reversals. And as you can see here, the downturn has come to an end, and right at the onset where the trend might reverse into the upper side, into the long direction, we already have an entry signal down here. And this is all based on our research on volatility divergence. The indicator works on all time frames, symbols, and chart types. I've chosen here a 1 minute time frame for this example, but you can apply the indicator on a 50-minute time frame, on daily time frames, weekly time frames. It will work exactly the same. You can have OHLC bars, you can have tick bars, and so forth. It will also work. And it also works on all asset classes and symbols. We've tried out the indicator on future symbols, on stock symbols, on FX, crypto, and so forth. So the indicator will work on all of these symbols as well. And as mentioned previously, the cloud colors are either greenish or reddish, as you can see here, and it will show to you whether we currently have bullish divergence or bearish divergence. And some traders may use only the coloring, not the signals, as an additional filters for their existing trading system. They would only go long using their signals if the cloud color, our indicator, is also green, or only go short if the cloud color would also be reddish. And now, what we're really proud of, and I believe what is unique when it comes to indicators, we actually provide to you as a trader what we call real-time statistics. We show on the chart and in real time how well the indicator has been performing, historically speaking. You can see this up here. In our look back period, which is the last week, we had a long efficiency of 78% and the short efficiency at 60.34%. And these numbers tell you, as the trader, how well the indicator has been working so far. You can see whether it's been working better on the long side or the short side. And you can see what's the ratio basically of the winning signals versus the losing signals. And of course, this will help you as a trader to really understand, is this indicator currently working? Is this indicator working for this particular symbol I'm interested in and this time frame I'm interested in? And sometimes the statistics will tell you, well, it is not working, or the statistics are currently not in your favor. And for you as a trader, knowing that sometimes something is not working is just as important as knowing something is working, because sometimes staying out of the market is the best trade advice that you may want to get. All right, so now that you've seen a bit of a glimpse of what the indicator does, let me put out another bold statement. I'm going to argue that our indicator, the divergence cloud indicator, benefits traders of all skill sets and levels. Now you may say, wow, really? How is that? Well, let me tell you. So let's say you're starting out and you're like our friend Chair, which you've seen previously on my slides, who's just starting out. She doesn't know much about trading yet, but she's really interested in, gaining some financial literacy and taking her financial future into her own hands. Now, how can this indicator help her? Well, Divergence Cloud will make her trading much easier, which is very important when you're just starting out, because you're easily overwhelmed with all the different things that can be done, perhaps can be done wrong. Now, our indicator will make it easy for her. Why is that? Because it's going to tell her when to get in, but also when to get out. Not many indicators do this, and they will typically tell you buy here, but they won't tell you when to get out of the trade or how to manage the trade. Chair will be able to take a look at the statistics to make an informed trading decision, and everybody can interpret percentages. So you would only take trades when the odds and the stats are in your favor. And it's as simple as this for Chair. Now, If you're more seasoned and perhaps you already have your own trading system in place, like our friend Matteo here, who's a professional trader, he's been trading full time, he has his own signal system in place, he can also take advantage of the divergence cloud indicator. Why? Well, he, for example, could use the cloud color on the chart, the reddish glow and the greenish glow, as an additional filter to his own trading system. So he'd only use his signals if they are consistent with the cloud color, or at least don't go against it. He wouldn't go short, for example, if the cloud is green, or vice versa. He could also use these statistics to identify long or short bias. Sometimes it's obvious that a symbol is trading in one direction, especially if it's on a bigger time frame. But on a smaller time frame, it may not be as obvious. But using our statistics, actually, we have empirical evidence whether the short direction is working better, or perhaps the long direction is working better, or perhaps both directions are equally the same. This is possible with these statistics, which will give you hard evidence how well the indicator is working in one direction or the other. And then, of course, you can use our statistics to, again, identify optimized high probability entries. And then we have our occasional trader, Steffi. Steffi works full-time and she only trades after work. For her, it's important to be able to identify trades in an efficient way. Well, no problem. Our divergence cloud will also help with that. We have developed a methodology called Scout. So Scout basically says scan for signals, go to the chart, optimize the parameters if you want, understand your risk and reward, and then trade. And this is possible because all our indicators, they're actually scannable. You can scan for signals. You identify these symbols which currently have a buy entry or a sell signal. You open up the chart, look at the statistics. If they're in your favor, go for the trade. If not, move on to the next signal. So this is basically how our methodology Scout would benefit Steffi, the occasional trader. All right, so enough theory. Let me quickly switch over to a live chart. Before I do this, Homer or David, are there any questions so far?
I have a question here about what's the relationship between the clouds and the buy and sell signals. Is that something, Daniel, maybe you'll address during the charts?
I'll address it right now. Yes.
Okay.
Any other questions so far? Or
no, that's it for now.
Perfect. Thank you.
Thanks.
Okay, so I'm going to switch over to a trading platform. I'm going to use NinjaTrader for this example, just because it's open already. But our indicators work on various trading platforms. Where did it go? Including NinjaTrader, but we also support TradingView, MT4, MT5, ModifWave, TradeStation, TAS, and others. Okay, so here we have our NinjaTrader platform, and this is a live chart. It is the, again, the S&P E-mini futures on the 1 minute time frame. And we have applied the divergence cloud indicator to the chart. As you can see, we're having these the reddish glows, the greenish glows, which are a bit hard to see, but you can adjust the opacity of these clouds to your liking. Now, what we can see here is the indicator applied. And Homer, you asked me, what is the relationship between an entry signal and the cloud color? Well, it's fairly easy. The cloud color is a precondition for having an entry in the direction. So for a short entry, the cloud must be reddish. It's a bit hard to see because of the opacity settings, but the cloud is slightly reddish here. And for a long entry signal, you must have a greenish cloud. Now, this is not the only condition. There are some other factors which we also considered, such as volume and some directionality of price that precedes the signal. But if all of these come together, a signal is issued. And the cloud color is a precondition for having a signal in that direction. And in fact, talking about the logic of our signals. Now, just like any other indicator, also our indicator comes with a bunch of parameters, which you can adjust to your liking and to get the best performance out of the indicator. And this is another strong use case for having these statistics. You can see here the long efficiency statistics and the short one. And now observe what happens when I adjust the parameters. So I'm adjusting, let's say, the ATR period. As you can see here, statistics will update in real time, which makes it very easy for you to find the best settings for this symbol and time frame. It's super fast. No need to click OK or to acknowledge the selection. Simply slide or change the parameter setting, and the indicator and the statistics will update in real time. Now, I will not cover in this presentation all these parameters, but we have created extensive documentation and videos explaining the exact meaning of all these parameters for our divergence cloud indicator.
Daniel,
Yes.
some of the clouds are hard to see, like you said, because of the opacity. So perhaps if you could change the parameters, because we saw the red, for example, on the left getting darker so that the audience can see that.
Yeah, let me just quickly do it. Just a second. Oops. I hope I did not. Oh, there we go. Yeah, my system is a bit slow with the Zoom recording at the same time. Yeah, we can adjust the opacity, which is just a second. Cloud colors. Cloud opacity is to 50. Let me set it to 100, which will make the clouds more visible. How's that? Okay, maybe that's a bit extreme, but at least now you can see the clouds very clearly.
Yeah, it looks good. Thanks.
Perfect. Okay. Now, so I'm just going to go through a couple of slides and showing to you how Divergence Cloud is able to identify good entries on recent charts. So this, for example, is today's price action on the S&P 500 futures. And you can see we had a couple of nice entries across the board since the beginning of the session today. So short entry here, a couple of long entries along the way, and so forth. So Divergence Cloud really is able to work on the smaller time frame, but also on the bigger time frame. So for example, let me switch over to Apple here. And here we have Apple on the daily chart. So you have a couple of entries here in the long direction and also in the short direction. But that's one interesting thing I wanted to point out here is look at the statistics. You can see here the long efficiency statistics is very high at around 87%, but the short efficiency is only at 37.5%. And this is actually very valuable information to the trader or to you guys. What you can see here is that we have a very strong long bias. Apple, of course, it's not very surprising. Apple's been trending up for a long time. And what we can learn from these statistics is that our indicator works better for Apple on the daily chart in the long direction compared to the short direction. So how can you as a trader take advantage of this? Well, what I would do is I would ignore all short signals and only focus on the long ones, because these give you the odds. And you want to trade when the odds are stacked and in your favor. Why trade the short direction, which has not been working out so far? Why force it? Just focus on what is working right now, which is the long direction. This is what these statistics here will show you. Now let's move over to another Apple chart. This is what we have here. We have Apple on the 15-minute time frame. And I've condensed it a little bit. But you can also see here that on the 15-minute time frame, the long stats are similar to what we've seen on the daily time frame at 86%, but the short efficiency is at 60%. So on the smaller time frame, which doesn't necessarily take into account global trends, short efficiency is actually much better than on the daily time frame. And this is also an important lesson. Sometimes signals will just work better on different time frames. But now you have the ability to find out what is working and what is not working on which time frame. Okay, so let me move over to yet another example. Here we have Tesla. What do we have? Tesla on the 1-minute time frame. As you can see here, we already had today a bunch of very nice short trades. If you're a scalper or a day trader, you could have seen that we had some very nice short trades. And this is today's price action. A short trade occurring here at around 11.50. It's still in place and it's already booked some profit along the way. And both, again, it's backed up by our statistics. Long efficiency well above 70, short efficiency at around 64%. All right. And last but not least, and just to explain or show to you or showcase to you that we really support all kinds of chart types. This is a 150 tick chart, very fast moving chart. And as you can see here, we did have a couple of interesting signals along the day also on the tick chart. Again, if you're a scalper or a short-term trader, also this indicator will perform for you. And again, we do have the statistics to back up our intuition that the indicator is working well on this chart type as well. All right. Let me go back to my slides. And before I do, Homer, are there any questions? Homer?
Sorry, I was on mute.
No worries.
We have a question from Al. How about the 5-minute time frame?
Yeah, it's the same thing. They will work on all time frames. So the indicator will give you statistics and signals on all time frames. What the statistics are, if they're in your favor, or perhaps they are better on the long direction versus the short direction, really depends on the symbol that you're using on the 5-minute time frame. They will work better for some symbols, perhaps not as good on other symbols. But at least now with the statistics, you will know what is working and what is not working.
Peggy wants to know if the indicator works on different platforms.
Yes. So yeah, this is just an example. I've picked NinjaTrader because I had it open, but we do support the indicator on all popular platforms, including TradingView, Thinkorswim, TradeStation, ModifWave, Wealth Charts, MT4, MT5. So yeah, all big platforms are included.
Neil wants to know if this works on Forex.
Yes, it does. We do have many clients that use this indicator on MT5 and MT4. Of course, MT4 is the Forex platform for most traders still to this day. And yeah, definitely.
Okay, that's it for now. Thanks.
Great. Okay. All right. So let me go back to my slides and cover a little bit more about what we've seen so far. So you have seen on the top right of the chart what we call our real-time statistics, which is basically an evaluation of how well the indicator is working. It's basically the indicator speaking to you, hey, I'm working right now, or perhaps I'm not working in one direction right now. So it will give you feedback. And this is why we call this indicator as the indicator with a personality, because it will give you some feedback how well it is behaving, basically. You do not need to perform any back tests or create a strategy at all. These statistics will be shown to you right off the bat. Just apply the indicator to the chart and you will see these statistics. Why are these statistics useful? Well, it will find you high probability entries, first of all. It will allow you to see if you change a parameter of our indicator, perhaps the ATR period, to a different value, whether this has made a positive impact or a negative impact. Without these statistics, it's just guesswork. You may change the ATR period from 14 to, I don't know, 21, but whether this change was good or bad, typically you don't know if you don't have the statistics. It's a question of intuition, but often your intuition might be wrong. Now, with these statistics, you have hard evidence of what was the effect of changing a parameter, for example. You can also use the parameters to identify a long or short bias, whether a stock is statistically trending up or down, or working better in one direction or the other. And of course, these statistics will allow you to only trade when conditions are favorable and stay out of the market when they are not. As I mentioned before, sometimes staying out of the market is the best trading advice that you can get. All right. So now a couple of use cases. So sometimes, and these are the E-mini on the 30-minute charts, you will find out that, well, it's working really good in both directions. For example, here we had 83% efficiency on the long side and 87% on the short side. And what this would mean to you as a trader, that both the long signals and also the short signals are actually working really well currently. Sometimes, if you've seen before with Apple, you will see that a symbol has a very strong bias in one direction or the other. For example, we made the symbol here, BANF on the 1 hour. We have a long efficiency of 85%, which is really high, but a short efficiency of only 12.5%. So what do you do in this case? I think it's fairly obvious. You stay away from the short trades. They're just not working out and focus on the long trades. Why wouldn't you trade when the odds are stacked in your favor and not against you? And these statistics allow you to do exactly this. And Sometimes the statistics will also tell you, hey, listen, neither direction is currently working. Long efficiency, perhaps only 25%. Short efficiency is only 42%. So what do you do in this case? Well, in this case, what I would do is I would stay away from the symbol. Yeah? There's so many symbols you can trade. This one is currently not working out, at least on this time frame. So I'll stay away and focus on a different symbol. Yeah. All right. So what else do we offer? Now, before I talk about this, I want to say something. If you have one of our indicators, including the indicator, which you've just seen, the divergence cloud indicator, you will not just get the chart indicator, but you will also get all kinds of support and additional material. So we're trying to be as open and as supportive to you, the trader, as we possibly can be. What does that mean? So if you have the divergence cloud indicator, you can use it in your own custom scans. You can use it to create your own watch lists. You can create custom alerts. You can even create your own EAs, expert advisors, based on our indicator. We do not lock anything up. Everything is available to you. We also do offer weekly live sessions and support sessions. We have a new webinar series called Thursday Tech Talk, which happens on every Thursday at 6 p.m. Eastern, where we discuss our latest indicators, where we answer questions, we show you tips and tricks about our tools. We'll provide to you cheat sheets to get you the best settings right off the bat. We have written up an extensive knowledge base out of documentation and videos to help you fine-tune the indicator, including a masterclass of 5 hours, how to fine-tune the indicator and optimize the parameters. You will also get a direct link to either me or our support staff, should you have any questions. And of course, our indicators are, or updates are free of charge, as long as they are on the same product generation. And of course, once you're part of our family, you will earn our eternal gratitude. And we show this to you by offering you discounts along the way, promotions and freebies. All right, so based on that, we have put together a special offer for you, which will entail a lifetime license of the Divergence Cloud Indicator, which you've just seen, which come with our real-time statistics, which will help you fine-tune your approach and trade only when the odds are stacked in your favor. You will also get access to our masterclass on demand, which is a 5-hour video series about our bigger methodology called Trading 360, which includes the Divergence Cloud Indicator. You will get access to our live group sessions, which are happening every Thursday. And typically, we offer all this for only $449. But as a thank you to you, and for the first 10 customers, we're actually having a special for this webinar series that we're offering this indicator for only $299. So it's a 33% discount of what it would typically cost, and it will give you all these features. We only reserve these for the first 10 customers, and then it will go back to its regular price of $449. So all you need to do, if you want to take advantage of our offer, is to go to our website, TradingIndicators.com/tech. Once you're there, you're going to see the product page for Divergence Cloud. And at checkout, there will be a field where you can enter a discount code. And for the first 10 customers who enter the discount code TECH2020, they will get the 33% discount for this offer. But of course, this is only reserved for the first 10 customers. All right. So well, I'll leave this open. I'd like to remind you that our offer is limited. So for the first 10 customers, and our indicator is available on all major platforms. Now, as you can see here, the look and feel will slightly vary from platform to platform, as they all have different ways to show the charts and the indicators. The statistics are available on all platforms equally, but the way to adjust, for example, the parameters might differ from indicator or from platform to platform. All right. So I encourage you to take advantage of this offer. Go to tradingindicators.com/tech. And for the first 10 customers, they will get this indicator at a very good price. All right. So Homa, are there any questions?
Yes, we have one question from Al. When I start trading at 9:30 a.m., for instance, on the 1 minute or 3 minute, and I want to check the efficiency of the instrument, how long before the system starts calculating the efficiency?
That's a very good question. So like with everything in our indicator, everything is customizable. So you actually can decide as a trader from when you want to start calculating. So if I, for example, you can just go to the settings of the indicator. And once this opens up, you will have a setting called, just go down, start date for the statistics. And here you can define from when you want to start calculating these statistics. By default, it's set to auto look back, which basically suggests a good look back period for you based on your time frame. So if you're on a 150 tick chart, it will go back to the beginning of today, because it's a very, very fast moving chart. If you are, for example, on a longer time frame, let's say Apple here, it goes back to 2017, roughly 5 years to calculate your statistics. And this is what auto look back will do. But you, as a trader, you also have the chance to set this date manually, and then the statistics will calculate from that date on. Any other questions, Homa?
No, we're good. I think it would be useful if you went through some more charts and examples.
Yep. Okay. Yeah. So let me perhaps explain to you how the indicator will work when you have a brand new chart applied to it. So let me, for example, just go to I don't know, to let's say Tesla here. It will open up the chart and it will show you all the signals on that chart. And then you can click on this widget here. Again, this varies a little bit from platform to platform. But once you click on it, you will see the statistics. So here on Tesla, on the daily chart, you can, for example, see that you have a long efficiency of 81% and a short efficiency, which is surprising because Tesla has been going up for so long, of 90%. But sometimes that's just the case. Even if a stock is going up in trend, this short signals can still work if they pick up short-time retracements. And let me just go here and perhaps explain a little bit how the different parameters work of the indicator. So as mentioned before, this is a divergence indicator. It tries to spot reversals based on divergence. And our notion of divergence is based on volatility. This is based on our own research. Now, and we calculate volatility using the ATR. And an ATR, as you know, is the average true range. And you can set the period for the ATR using this parameter. By default, it's 17, but you can change it to different values. And as you do it, you can see the statistics will update accordingly. We also have another parameter in here. It's called min price move. So it is, since this is a reversal indicator, in order for a reversal to happen, we need to be in a trend before that. For example, here we were in an uptrend, and then we have a reversal signal to the downside. Sometimes if the previous trend is rather flat or the slope is very, very little, the signals may not be as good. So we have introduced a parameter which requires that the previous trend has to have a certain strength, which is this parameter here, the min price move. As you can see here, if I increase this value, some of the signals will disappear because it's more stringent. So the requirements for the previous trend are higher. If I set this parameter to a lower value, you see you're gonna get more signals. What's the sweet spot? Well, it depends on the symbol and time frame, but you can find this out very easily by looking at the statistics. And perhaps two other parameters to quickly mention. The first one is the long partial exits and the short partial exits. As mentioned, our indicator not only shows you when to get in, but also when to get out. Now, how many partial exits you want to book? Well, this is defined by this parameter here. If I set this, for example, to a lower value, like 2 exits, you see here, we have only 2 partial exits. If I set it to a higher value, you will see you get more partial exits along the way. Again, This will affect your statistics. So I encourage you to also look at the statistics, long efficiency and short efficiency when you modify this parameter. And last but not least, we also have a parameter called trading style. By default, we show both long and short entries, but perhaps for some symbols, perhaps if it's a registered account, you might only be interested in the long direction. So you can limit the indicator to only show long signals in that case, and all the short signals will be removed from the chart. And this is also a useful feature if you do not want to clutter your chart. If you already have made up your mind, I only want to go long, I'm never going to short a position, then I encourage you to use the trading style long only, which will remove all short signals from the chart and will give you a clearer picture of what is going on. All right. Oma, are there any
I have
questions?
a question here
Yeah.
from Danny. What's the risk reward you are considering for your statistics?
Yeah. Okay. Actually, the risk reward is not considered at all. And this is not statistics which will allow you to estimate how much profit you may make, because that would depend on, what was your original position size, how much do you take off at every partial exit and so forth. We do not have this information. However, what this statistic will show you is that how many winners that we have versus how many losers. In terms of risk reward, I can tell you that on average, the winner is way bigger than our loser. Yeah. So as you can see here, sometimes you let the trade run for a really long time, booking a very large winner. And this, so in that way, the winners are typically much bigger than the losers. Anything else?
No, we're good. No more questions on our end.
Perfect. Okay, so let me go back to my last slide. If you have any questions, please reach out to us. Yeah, simply go to our homepage, TradingIndicators.com, and over there you have a contact form. And if you write your question there, this email will be delivered to me personally, and I will respond to all of your questions. And if you have any feedback, as mentioned previously, I would be super interested in this because this is what drives the innovation of our products. The divergence cloud indicator, as you've seen today, is now in its 8th iteration or 8th version, and all of these versions have been driven by customer feedback. Yeah? We're not trying to, create an indicator which we force onto the market. It's the opposite. We're listening to our customers, to your traders, what the needs are, and to integrate the features that are truly needed by our traders. And if you want to take advantage of our special offer for the first 10 customers, again, go to tradingindicators.com/tech. And at checkout, simply enter the discount code TECH2020. And this offer will be valid for the first 10 customers. And again, you not only get the indicator, which, by the way, is for life. We're never ever going to ask you for another payment for this indicator. You have it forever. You will also get all the statistics. You get our masterclass, 5 hours on demand, and our weekly group sessions, all included, and all free of charge after your initial purchase. All right. So, David, if there are no further questions, perhaps you have a question or someone?
Yeah. Hey, Daniel. I am not seeing any more.
There's one question that just came in, sorry, from Ryan. If we had previously purchased a different version of the Divergence Cloud, does it update automatically in our platform?
Well, it depends on the platform. If you're on TradingView, yes, it will update automatically. If you are on Wealth Charts, that's also the case. For most other platforms, you will receive a new installation file from us. First of all, you will be notified that there's a new version, including what has been changed and modified and improved. And then you will also receive instructions on how to install this new version into the platform. It's a super simple process for most platforms, and you will get all our support to do this. So this is no problem.
Palin wants to know when the recordings will be available. I guess that's a question for David.
Yeah, I'm recording each of the presentations individually. Those will be on TimingResearch.com as soon as I can get them posted. Also, if you subscribe to Timing Research on YouTube or your favorite podcast app, you can get instant updates that way.
Yeah, perfect. And perhaps one thing I can mention at the end. So Divergence Cloud is one of our many indicators that we have. It's one of my favorite ones because it gives very reliable signals. But we do have a whole suite built around the Divergence Cloud indicator as well, which we call the Power Bundle, which includes the Divergence Cloud, but also two other indicators. One is called 1-2-3 Strike, which is designed for trend trading. And the other one is called Volatility Crusher, which is for trading breakouts. And in this Power Bundle, you get all three indicators. And the way why most traders do like the Power Bundle is because they now have an indicator for each market style. So Divergence Cloud for finding reversals, 1-2-3 Strike for finding trend entries, and Volatility Crusher for trading breakouts out of a sideways consolidation. And Divergence Cloud is one of these indicators in this package. All right.
And I would actually encourage everyone, if they're interested in using these indicators, to attend our Thursday Tech Talks, which are starting tomorrow. If you join our mailing list, I'm going to be sending out an email tomorrow with the link to register for that. And that's going to be happening weekly.
Yeah, and it's super easy to join our list. If you're not already on there, simply go to our homepage, TradingIndicators.com, and either that you'll see a pop-up to be added to our mailing list, or you can simply go to the Join button in the main menu, enter your email address there, and you will be added to our mailing list. And as such, you will be notified of any updates that happens in our store, any promotions that we may have, and of course, when our webinars, including the Thursday Trade Talks, are taking place. All right. David, do you want to take over?
All right. Yeah. Great presentation. Thank you for being here.
Yeah, you're welcome.